How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Australian dollar versus the US dollar. As we can see, we have a higher swing low formation. So today takes out the previous daily high, doesn't take out the low, so it confirms this swing low formation. There's a higher low on the left and a higher low on the right. This is why it is a swing low. It is higher than this one here, and it's also higher than this one here. So we have lower swing lows, and now this is the highest swing low that we have most recently in time after breaking a swing high formation. So if you follow the steps, a swing high was broken and we're waiting for a higher swing low to form. You can see the higher swing low forms. Now we can look for long opportunities. So we could see or speculate that Monday was the low of the week and we're looking for higher prices. Odds are we're going to try and get to this swing high formation here. So Friday the 14th, we would like to get back here. So we'll mark it off in red, and we'll put a target sign above it because that's where I would want to see price go if I was a buyer, to that high there. Now, if you look at the DXY, we can see we're confirming, not so yet because we didn't break the low yet of that candle, but we have a lower swing high. In theory, the formation has a lower high on the left and a lower high on the right. So this could be the potential new lower swing high. Once this middle candle's low is broken, then it's going to be really confirmed. If it's not broken, then it's not as confirmed. And we want it to be broken. It doesn't have to have a body closing below the low, but the middle point here needs its low to be broken for it to look like it's turning the corner and going lower. If that is the case and it's going short, I would like to see this swing low formation here. So this low on April the 14th as well, Friday, I want to see that low taken out as well. If you look at it from the weekly perspective, you can see that on Monday we traded down into that daily fair value gap. So price comes down below the weekly open into a discount, taps into that daily fair value gap, comes down to consequent encroachment here, and then it runs higher ever since. Tuesday, you can see we're running up and we're taking out previous daily highs. So I would like to see price on Wednesday take out Tuesday's high and Thursday potentially making the high of the week, Friday coming back down. So something along the lines like this: up, up, and then down, close. So I would like to see the rest of the week finish that way. If not, Tuesday or Wednesday would make the high of the week and it'll come back down to Sunday's opening price. If it does get back down to Sunday's opening price, I would just look at that as potential opportunity to go long once again anywhere if it taps here. We should see a strong reaction away from the weekly opening price because it's fair value, and once it crosses below it, you're going back down to discount, which is a high probability buy scenario. If you look at the DXY, you can see we're inside of a mitigation block currently for the week. Now there were other PD arrays as well, and I'll show that on the daily time frame, but we can see that price is currently inside that mitigation block because price made a lower swing high formation, didn't break a high. So if you look at this on the daily, and you look at it from this perspective, you can see that we have a potential mitigation block that ICT teaches. So we have price coming down, high point coming down, running back up, making a short-term rally, failing to break this high, drops down once more, and now it's trading back into the low that it created here. So we're taking the last down close candle before the rally, the whole block, so the high to low, including the wicks here, draw that out, and you can see we're currently trading back into it. There are also some PD array theories like the SIBI fair value gap here. We have a bearish order block theory here, price trading up into the last up close candle before the drop down here. You have this as well, so this could also be a propulsion block, price coming down back into this with an up close, and then price coming down and back into this as another order block theory propulsion block. All in all, I still speculate lower prices for DXY and higher prices for our foreign currency pairs like GU, EU, NU. So if we look at British pound versus US dollar, we can see that we are confirming a higher swing low. We have it here, 1, 2, 3. Price does not take out this swing low here and makes a higher one here, and it's confirmed because the middle candle here, its high is broken by this candle, takes out the previous daily high. So now I would like to see GU get back up to here, come up, take those highs out. If you look at euro versus US dollar, You can see as well, we're creating a swing low formation inside that busy. So that fair value gap up, coming down into it and looking to go higher as well. You can also see this is a mitigation block theory blended in with the busy. Price has a short-term low here, rallies, makes a short-term high, drops away, fails to break this low, runs above it, is trading back down into that short-term high, and mixed in with the busy. And then we also have some order block theory, down close candles before the rally away. So there's a lot of confluences adding up for price to want to probably potentially take out this swing high next for euro dollar. But all in all, I am still bullish on AU. My bias is not switching back bearish until we break a swing low. So if we have a failure swing and price breaks down one more time, then I would have to switch my bias and the whole process will start over once again. Overall though, if we're looking at IPTA, we still want to see these targets hit. So the 40-day look back high up here and the 60-day look back high here. This is the most relative swing high that hasn't been broken since the start of April, besides this one here. So this would be the next one, closest swing high for price to hit in a long-term objective or mid-term objective. This would probably be more of a long-term high because there's a lower swing high on the left, 1, 2, 3 here. This is a middle swing high here. And then there's a lower swing high on the right side, 1, 2, 3. So this would be long-term or key high here. And that price point would be 715.78. And we'll see if price wants to get there long-term. Dollar still not showing any signs of strength yet. I really want to see if dollar will continue to break down on the daily chart and give us a lower swing high formation here. 1, 2, 3. We just need to take out that low here. Hopefully this was insightful. Oh, one more thing before I go, actually. You can see there is a large range cycle that kicked in today as well. So you can see that swing low formation, but look how this candle is small. And like I said, next day, odds are, if you check the last episode, I said a large candle is expected. And sure enough, the next day, the body, you can see the body of the candle, even the wick, if you wanted to go off the wick, but mainly looking at the body, look how it's completely larger than this one here. So that's how you're able to catch dynamic days moving on. Wait for the small candle, then wait for a large one. You have an example here, small, back to large, small, large. And that's what I did here. And I'm still holding the longs from Monday. See if you can ride this out to Thursday and potentially up here. Peace.